Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin. A lot's been going on in the last 24 hours, so I'm going to give you a brief update on the 1 hour chart, and maybe, if we get time, we'll take a look at the slightly larger daily and weekly timeframes as well. As I get into the video, if you find it useful and informative, hit that like button. I really do appreciate that. It helps spread the content to more like-minded individuals. And if you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's the first place that we go to notify you of everything that is going on in the crypto space. Let's jump right down into this one, right? So Bitcoin paired up with USDT on the 1 hour chart, and Binance is our data source. Okay, we've got smart money concepts to review, we've got some Elliott wave theory to review, and like I said, we might go into the larger time frame stuff as well if we get time. Let's start with the Elliott wave. A lot of time has passed on the Elliott wave theory here, at least in terms of where we'd expect this fourth wave to go. Now, still technically is valid to move down. We've started to see a bit of a move to the downside. We've failed to invalidate or break this structure. So what I'm going to do is I'm going to adjust this again for the third time, just to see how this goes. Ultimately, the higher that wave 4 goes, the lower that wave 5 goes. And so our target range is now down here at 25,934 to 26,285. Now, because a lot of time has passed, and although this is still technically valid, one starts to wonder whether or not this is actually something that we need to consider, or whether or not actually this needs to be changed out of the 5-wave structure more into a 3-wave structure. And so I'll leave it like this for now, but just bear in mind that this may actually just be an A, B, C structure, and we'll know by the time we actually move down whether this is or is not the case. Okay, so from an Elliott wave theory point of view, I'll leave it like a 5-wave structure for now. It is still technically a 5-wave structure, as it has not invalidated by crossing the 27,524, but it could also just be seen as an ABC structure or WXY structure. So for now, it is what it is. We'll leave it there, and we can kind of take a look and take stock of what happens next. So over the next couple of days, it should be a lot clearer as to what this structure is, and it will help us understand what is going on over this side as well. Okay, because we do have, at the moment, the ability to look at this as either zigzag, double zigzag, or potentially a nesting within our impulsive structures. Okay, so a few things to kind of consider. Now, with the move that we've seen in the last few hours, this particular one here, where Bitcoin has moved down a 2.6% move, this is looking very much like the type of impulsive structure that we would see to the downside. Okay, it still doesn't necessarily mean that that's what's going to happen. It's just the way that this is currently looking to me like we have potentially formed out with a 5-wave, or starting to form out a 5-wave structure. So we kind of see 1, 2, coming down here, 3, 4, potentially into 5, that kind of thing. But we'll see, okay, because if we do have this as an impulsive, then we are going to be looking at something either diagonal wise, an ending diagonal, or a impulsive structure taking us down deeper potentially than we were looking for on the 25,934 to 26,285. So just bear that in mind. Now, moving over into the smart money concept side, slightly easier to understand, less cluttered, and all that, we can see that we got rejected from equilibrium. This is not a coincidence, okay? Equilibrium usually acts as either support or resistance, and it is a 50% Fibonacci level between the highs and the lows. So when we see an equilibrium and we see that prices are moving towards it, we either know that we are going to find it as a support or a resistance. In this particular case, we can see that equilibrium here has acted as resistance. Now, we can also see that we were consolidating on the 50 and 200 hourly EMAs, and we got rejected from both of those when we got rejected from equilibrium. So we came down here. Now we are trading below the 50 and 200 EMA, with the 50 EMA being lower than the 200 EMA. Essentially, this means that the short-term price action is lower than the longer-term price action, and price is trading below both of those. So again, it's deemed to be slightly more bearish. As you can kind of see from this minor change of characteristic to bearish state of play at a minor break of structure, confirming that we're in a minor bearish structure at the moment. Our slightly bigger overview structure, though, on the hourly chart is still in a bullish state, and so this is just minor movements at the moment. Just bear that in mind. The red area here, just below equilibrium, is acting as our internal sell order blocks. This is where the sellers are. So this is coming in at 27,125 to 27,337. You can see that we find a little bit of green right here, and this is because we're on top of the buy order block internally. Okay, now this is at 26,559 to 26,785 approximately. Now, the thing that we've got to bear in mind is that we've just tapped into it and we've moved out. Okay, we'll have to see whether or not we can chew through all of those buy orders, or whether those buy orders are going to send us right back up towards our sell orders. Okay, and again, we'll have to see how that kind of plays out. Ultimately, we are between two key areas. Let me go ahead and just remove that one. We're basically grab this one and put it up here as well. Between these two key areas, the highs and the lows. Okay, so 25,871 on the low side and 28,447 on the high side. Okay, so what we're doing here is basically either doing or having a three-wave structured move to the upside, which I do not think is the case, mainly because we kind of already see that we have a three-wave structure to the upside here, which will basically mean that I'm looking more for a three-wave structure to move to the downside. And what we want to do is we ideally want to stay above this level here. Okay, we want to stay above the 25,871 if we want to be bullish on the market. If we want Bitcoin to go to 30K, then we need to stay above this level, right? And so all eyes are on whether or not Bitcoin's going to hold the line. Okay, the bulls have to hold the line here. Now, we'll talk about $30,000 Bitcoin up here, right? We have the yellow box range. This will adjust and change a little bit, okay? Because if we look at this slightly differently, as in, we don't take a look at that low there, we just basically assume that this is the beginning structure, then we would basically look at it like this. We'd go A, B, and then C like that. Now, I think there's a low probability of this at the moment. I don't think the market is going to be looking for that move up there, but it's a volatile week, so we never know what's going to unfold. There's a lot of fundamental things going on, so if you haven't done so already, do join us down in Discord, as JB, one of our team members, has put together a slide on all the different things that are happening this week by day, so you can keep a finger on the pulse of crypto. So yeah, do join us down in Discord if that's the kind of thing you're looking for as well. So a lot going on this week, lots of things that may cause some volatility within the price action. So yeah, at the moment this looks like we have a WXYXZ structured move to the downside. I think it doesn't quite reach the requirement for an impulsive structure, but I'll just quickly check it. And it did there, didn't it? And that's because we still technically have that five-wave structure going on like this. Now, if that does complete and we do that structure and we do complete that structure, then unfortunately, yeah, we're probably not going to go higher than 28,447. That structure would hold in place. The only alternative there would be that we would have ourselves a running flat correction or a irregular flat corrections are possibilities if we do breach the low side, but it'd be interesting to kind of see how that plays out gradually over time. On the daily time frame, you're consolidating on this supply range. I think with the consolidation that's occurred here, I think it's safe to say that this supply range is not rejecting price on the daily time frame. If we take a look at it from the weekly, this one here clearly is though. Okay, so we got rejected on the higher side, finding support on the lower side, specifically on that 50 EMA. But from our daily time frame, this previous area here is looking like we've chewed through a lot of that resistance, and we're actually potentially turning it into a support level. At the moment, though, on the daily time frame, we're getting rejected on the 50 EMA, looking for support potentially down on the 200 EMA. That's 25,211. So looking for that, and also our lower trend line. As you can see, we're in higher highs and higher lows, and well, unfortunately, this to me would be a pretty bearish play because these do have a tendency to want to break down, and it's a potential big bear flag right in there. Counter to that, we should also explain on the weekly time frame what's looking reasonably well, and that is that we have ourselves lower highs and lower lows and potentially a bull flag situation on the weekly. Okay, so there's a few things going on here that are going to cause a fair amount of volatility. Do expect at some point a move upwards. I think that's a bit of a given here, considering the weekly time frame correcting down quite nicely, and our daily time frame also moving down quite nicely. We're probably going to be looking to test some higher ranges, possibly even going for the CME gap on the daily, which would put us at about $34,000 to $35,000. And if it does that, then from there, I think we're in a really strong position for a break to the downside once that CME gap is gathered and grabbed, essentially. But, you know, it's all to play for. The bulls and the bears continue to rage and war against each other, and the whales continue to grab as much liquidity as possible. Let me know in the comments down below. Do you think the 35K is what the bulls are trying to target and trying to go after, or do you think the bears are going to be successful in dragging us down towards $20,000? Let me know in the comments down below. If you found this useful and informative, smash the like button. I appreciate that. If you're new to the channel, then why not subscribe? Don't forget to join us down in Discord, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.